Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Thursday, December 7th, the day before non-farm payrolls and unemployment rate. This is the week of employment, of labor. And today we got initial jobless claims and continuing jobless claims. And basically, more or less as expected, 220, a little bit higher, less than expected, and 1861 way lower than the previous one and way lower than expected. But I think markets, they are waiting for tomorrow. They liked yesterday's number. Today's, I think this is okay. This is basically half a point. I don't know. But what is true is that when you have doubts regarding the sentiment, the bias, you have to really apply technical analysis. And we are going to do that to the extremes today, because today it's again a very difficult trading day after the open. And we have to really look for things that help us really understand what it's trying, what the market is trying to do, and what kind of overall sentiment do we have. This is a naked without any. First, we are going to go to the naked 4-hour chart, sorry, 1-hour chart. We have this fair value gap. So the first thing that I notice is that we are respecting. This is the inverse fair value gap. And yesterday we got also these bullies. So if you take the regular trading hours, we have this candle being respected and this inverse being disrespected. So right at the open, we were quite bullish, but during pre-market, we have several opportunities, as always, to really gather some really nice trades. And I like to start watching the market when London open, because you have these kind of opportunities. You have this week, and you have at London open. London open is basically here at 3 a.m. Before that London open, we got these two liquidity runs and this massive trade. This is a bullish fair value gap, push, retracement, and going higher. Since then, we've been grinding higher and higher and higher, and this was a really brutal entry. Down here, 15,800 and something, and it was really, I didn't expect this. And one of the things I always like to do is to just chart the order blocks and chart every liquidity down here from days before. And since then, we have this 30-minute fair value gap, and we have this order block down here, here, and here. So the blue dot line, it's basically one of the points in which today this is the order block, we grab liquidity lower, and if I see this, I'm going to take a trade. And that trade is going to provide me with incredible risk-reward ratios. And that's what I'm looking for. That was pre-market low. And since then, we've been going higher. But independent of that, the risk-reward ratio with just 5 ticks or 5 points like that, $100 of risk, 200 depending on your size. But I think this is a brutal, unbelievable good trade on pre-market. After that, well, we have our levels. What were our levels? And the first thing that you have to notice is that 30 inverse fair value gap that I was watching before in the 1 hour, nailed down, broken down into the 30-minute chart. So here I was quite bullish on the day. Where you can really have those entries depends on your time frame, 5 minutes, 1 minute, 3 minutes. I like to pinpoint sentiment on 30-minute chart, 1 hour, and I really like to get my entries on the 1 minute chart. So we got this order block, bearish order block here. So watch this line, because into the open it was quite critical also. This was the 8:30 candle, initial jobless claims, move lower and push higher. And look at this. This is the blue line, the order block. This is the entire body candle body. And as you can see, we got our pre-market high here. We got a push down, basically getting all the liquidity down here. And then we moved up. The first thing that I noticed is that this inverse fair value gap that we respected initially got run through. So you can take your trade here with the stop down here or things like that. And the first target is that liquidity up here, we run through. In this spot, you have to be bullish. And it's 8:45. You have a lot of time into the open to really watch the price action, analyze the price action. And honestly, it was pretty damn good open. Look at this. This was a nice entry down here that got run through for the liquidity. From where is coming the liquidity? Basically, it's I go on the 30-minute chart and we got this triple top: first liquidity, second liquidity, and third liquidity. This was on the run up. So initially I thought, okay, we are going to just go straight because that's 1, 2, and 3. And here we started chopping around. And that's where going to the ES is really, really awesome. Because ES was also having problems. We got this double top and we start going lower. So on the Nasdaq, we got this market structure change. We got this fair value gap that got respected. And I got my first entry short up here with the stop basically at this week. So this is my first trade, 17 points. The target, sell side liquidity down here, low of day. And after that, I was not too confident because we ran through like crazy and the economic numbers were quite decent. So look at this accumulation. This was a level that I was watching, and the same thing that I was watching is basically this inverse fair value gap that we just took right here. I didn't take a trade. I was watching for the liquidity run, and then things started to get really, really choppy. We just consolidate up here, and this is one of the nasty moves that we got today. Liquidity run here, high of day, rejection. Look at this. Market structure change, and I was waiting for this to give me an entry. I missed this short. That would have been 14, targeting liquidity, and honestly, I was quite frustrated. I didn't chase the price action, so I basically lost this opportunity. I was already with a little bit of caution today, and I was just, okay, I will wait for next opportunity for the market to show me what it wants to do. And look at this fair value gap. This candle, it's quite telling, right? So we ran through that. We got this huge bullish candle, and I basically took this as support. I took this as an entry with the stop down here, as you can see, and targeting liquidity of high of day for all these shorts to get destroyed. And I got that exactly, that really awesome trade for a big reversal. I was not expecting this reversal. I was actually with one short and two short quite bearish on the day because price action was showing me that really choppy on the upside, really nice move to the downside. So sometimes you have to trade what you see. And right now what I see is that we are going to run to this liquidity. So almost 60 points on this trade. I'm more than done. And then I was really expecting to go through these other two liquidities. Let's just zoom out a bit to the 30-minute chart because look at where are we. Look at where are we. We have all this liquidity up here at 16,037 and 30 something. We are starting to go to pretty damn high levels. The next level of liquidity is this double top at 16,100. So for now, I mean, this is just consolidation, and I don't think there's any setup more than this as a breakout. But I don't like to trade these kind of things. I would wait for some kind of pullback into the run. But as you can see, well, liquidity has been taken. And we have the 16,050. And as you can see, if you notice, we are in an inverse fair value gap, red telling here. The 1 hour is getting there. This is the 1 hour, and this is the 4 hour also. So let's go to the 4 hour because now things are starting to get really interesting. You can see we have a big fat green candle on the 4 hour, and most probably this liquidity is going to be taken, this one. And if we hold the 4 hour, this move might destroy a lot of shorts today. Don't expect that, but be aware of that possibility. That's the difference between adjusting your expectations and trading the market you are in, or basically praying for a big, huge move. We are 1.44% in the green on the Nasdaq. Google is destroying everyone with 6.44% in the green with news of the new Gemini AI model. And that's why the ES is not that strong. It's just Nasdaq is carrying the market. So once we take this liquidity that I don't think we are going to spend too much time here, we are just going to skyrocket here. Be careful there because we are at the 1 hour and 4 hour fair value gaps. And this here might be a possibility, but watch out for a massive rundown. Look at this. Huge push. Liquidity taken. Let's see if we displace to the downside and see this kind of thing. If not, well, we are more and more bullish. Dollar is in the red. Yields are in the red. Small caps are quite choppy. Banks, financials are quite in the green, honestly. But the thing that you have to watch the most is Google. Look at this massive run. Google is carrying the Nasdaq, and the Nasdaq is carrying the entire market. This is it's not ideal to really just depend on Google for being bullish, but well, at least you can look towards these kind of things as support. That might be awesome. And I think this is the line of the sand for the bulls. If we continue moving, just wait for a pullback and a fair value gap, and I think we might see a beautiful run of basically around 50 points up here. So if I was to continue watching the market, I would just wait for a pullback here, do this. So basically take your long at around here, or even on the 50% retracement of this candle. Your stop is down here, and your target is basically, I would just start with this fair value gap on 16,085, you have a 1-to-3 risk reward ratio, really nice. But again, manage your expectations. The pullback might be there, but you can also, after grabbing all this liquidity, you can just completely retrace. The same thing that we did here. We took liquidity and we just broke market structure. There's plenty of shorts willing to take this kind of thing. And as you can see, this is not super confident, but watch this fair value gap. We are in a 1 hour and 4 hour inverse fair value gap. We just took liquidity. Be careful with these moves. Be really careful. There's more liquidity up here, but be careful with the model and with the kind of structure that you are waiting for. Manage your expectations, and remember that tomorrow we have non-farm payrolls and unemployment rate 1 hour before the open. So this might destroy your account if you don't manage risk. If you manage risk properly, you have a really decent trade for an opportunity higher, but really be really careful because live to trade another day. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel because I upload videos like this every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Remember that discipline and risk management are key for your success. Stay safe, everyone, and see you tomorrow, Friday. Remember, Fridays, big numbers, unemployment, and non-farm payrolls. So Fridays are to put your nail